The second approach, and the one that's much simpler and more beginner friendly, is just simply investing in index funds. An index fund like an S&P 500 ETF gives you exposure to a diversified portfolio of hundreds of the top US companies with one single purchase. This is more of a passive strategy where you basically set it and forget it, relying on the market's historical average returns of 8 to 10% over time. An example of a fund that tracks the S&P 500 is ticker symbol VFIAX, or ticker symbol VOO is the ETF version. A ticker symbol is like an airport code. You know how JFK references John F. Kennedy Airport, or LHR is London Heathrow. Investments that you can buy in the market have their own codes, and these are called ticker symbols. So companies like Apple, Google, Microsoft, etc., they have their own symbols. Index funds are passively managed, so there are super low fees because they have no fund manager, and not to mention your money is being instantly diversified among all these holdings because an index fund will just buy everything that's in that index. Another similar option is called a target date fund that adjusts its asset allocation as you approach retirement. For example, if you plan to retire in say 2060, a target date fund will start heavily weighted in stocks right now and gradually shift towards safer investments like bonds as the retirement date approaches. 2060 refers to the date that you would want to retire, and these are most commonly found in retirement accounts like the 401k. For most beginners, I think you either go with all index funds, or perhaps another beginner-friendly strategy is to have the majority of your money in index funds and then just have a few additional individual stocks for additional upside and growth potential. Beginner investing strategies aren't about day trading or chasing quick returns. It's more about long-term investing. Remember, there are tax implications too for different strategies, which we will cover later, but the key takeaway is this: you want to focus on building a portfolio that matches your risk tolerance and your goals. I'm going to give you guys a cautionary tale as to why you should not want to pick individual stocks as a beginner, so consider the tech company Intel.